In this week's update, US bull market remains in full swing. How to capture the best of it? The gold pattern, highly bullish. And Bitcoin, close, but no cigar. My name's Garry Davis. I'm an authorised representative of Primary Securities, and any advice is general advice only. Your personal objectives, financial situation or needs have not been taken into consideration. Let's start with an overall market perspective that was quite a fascinating week. We've got obviously severe and very concerning political tensions that are very, very unpredictable. We also had a very vital NVIDIA earnings report, which is instrumental in setting the sentiment for the US stock market. And that had some pluses and minuses, but on benefit, the market moved on. Trump made some key appointments that are already starting to unravel. That's causing plenty of controversy. But despite all that, we had a week of gains and reasonably steady stock gains. Sure, there were a few individual stocks that had some significant volatility, but the vast majority of the week was pretty much steady as you go to the upward side. And of course, the final thing is don't forget about Bitcoin, which has absolutely rocketed up on the US election result in part. It was probably going to go up anyway, but the US election result has provided an added stimulus. Could be getting a bit speculative, but look, we'll have a look a bit more at that shortly. So just an overall perspective on Bitcoin that I thought viewers might find interesting, and I really know very, very little about Bitcoin. My view of Bitcoin is mostly technical, but increasingly I can acknowledge that given the way that global monetary policy is unfolding over the decades and all the debt levels, that there is a place for an alternative. So this is a number that I have seen online. I can't put my hand on my heart and tell you that it's absolutely correct, but this is what I saw online, that the total market cap of the Bitcoin market was close to $2 trillion. Now, to put that in perspective, there is only 5 stocks in the US that have a larger market cap, up to just over $3 trillion, and that's Apple, Microsoft, NVIDIA, Amazon, and Google. So that starts to make Bitcoin a pretty significant asset class. And if you want to compare it with the gold market, because there's been plenty of discussion in the last couple of years whether Bitcoin was stealing some of the money flows that would have otherwise got into the gold market. The gold market cap at the moment is reported as being $18.5 trillion. Bitcoin is $2 trillion, but it's obviously increasing at a much faster rate. And when you look at the supply and demand situation, it certainly has the potential to increase at a much faster rate than the gold market. So I don't think Bitcoin can be dismissed, and some of the people that I associate with just sort of shake their hands and say, yeah, but it's not worth anything. There is no fundamental basis. Well, I think we've moved past that point now. I think Bitcoin is probably here to stay. The question is, how big? So overall, we've got Fed policy signals that remain relatively accommodative. Yeah, they're making a few noises about if inflation doesn't come down and we might do this or we might delay that. But basically, if you wrap it all up, Fed policy remains fairly accommodative for further rate cuts. The labour market, though, is sending some quite mixed signals, and that points to the potential impacts on consumers if unemployment levels rise. So that is one that certainly could impact part of the US market. We've got the Department of Justice actions could impact on Google, but somehow I don't think it's going to be terribly fearful. And in any case, there are almost certain leadership changes going to happen in the Department of Justice. So depending on how you want to invest, this could be a very good opportunity to get into Google. But again, you need to make up your own mind, seek your own investment advice on that. Now, if we look at the Trump effects, it's really unclear. He's going to have a disruptive approach. We all know that, and that creates a lot of uncertainty. But there's going to be parts of the market where it's going to be a real positive, and we're already seeing that with finance and infrastructure. So what is going to be the balance between him disturbing the castle, if you like, and the positives that are going to flow from policy changes? And at the end of the day, Trump's a capitalist, so I don't think he's going to do too much damage to the stock market. Otherwise, he will change direction. He's shown in the past that whilst he has very clear and sometimes highly controversial thoughts that he is prepared to change. So the next 4 years promises to be lively at the very least. All right, now, again, it's, as I say every week, it is actually easier to lose money in the stock market than it is to make money. And so therefore, you need to have a plan and you need to have all of your investment and financial and legal and any other advice organised before you take any action. Most important. Let's turn to American stocks. The S&P put on 1.7 for the week, the NASDAQ 1.9, so they're good, healthy gains. And the Russell 2000 for small caps, which was down sharply last week by around 4%, reversed straight back up again, and it was up 4.5%, so a very good week. And there are just some absolutely stunning trends in America in the smaller part of the market. We've also got the financials and the industrials are trending very strongly. The leaders, as we'll see, utilities, energy, and consumer discretionary. Communication services was the only sector that was in the negative. So 10 sectors up, 1 sector down in the last week. But we'll have a look at our monthly and quarterly charts in just a minute. Now, the US dollar moved sharply higher to 107.5. And over the last month and year to date, the US dollar is the leading major currency. So naturally, the Australian dollar has also come off. The 10-year yield is still holding around this 4.4 area, and the VIX slipped back a little bit from the 16s back into the 15s. Let's go and look at some charts. This is the S&P on a weekly chart. So we're a little bit shy of the highs that we set a couple of weeks ago, but you've got to look at that, step back and say, well, that is a very robust trend and it's not showing. There are no signals there at all that we're going to be doing anything different other than what we're doing. We have a little bit of a blip here. This was the week starting the 5th of August, which was to do with the unwinding of the yen carry trade and the noises the Bank of Japan was making about interest rates. But that the market very, very quickly regathered itself and just shot straight back up again. We've had the odd week where we've been down, but the overall majority is green candles and higher highs, so very impressive. This is the Russell on a weekly chart, so we're just flirting with these all-time highs that were formed back in November of 2021 at the exit of that incredible bull market that came out of COVID. We had a hugely strong week on the election result. Then we had a rethink in the week before last, but all's forgiven and we're now back up trading at a, what is that, basically it's a three-year high for the small caps. NASDAQ on a weekly chart, just lagging a little bit. Part of that is obviously there's been a bit of a negative drag from Google, which did get hit in the latter half of last week. Semiconductors, very important for the health and sentiment of the US market. It's just marking time. We had a great run. And now we're getting consolidation, nothing unusual there, and there's certainly no dire signs at all from the semiconductor market. If we look over the last quarter, consumer discretionary leads the way, but as I note just about every week, big influence from Amazon and Tesla in that index, so a bit misleading as to what's happening in the broader consumer discretionary market. Finance clearly has been a huge beneficiary of the election result. Communication services, whilst it was down last week and it was the only sector that was down, it still ranks reasonably highly when you look back over the last quarter. And then we come down to energy, which has definitely picked up since the election with Trump's now increasingly famous drill baby drill comments. Then we've got technology, which is, it's just sort of in the middle of the pack and there's a real mixed bag of outcomes there for those major stocks. And then we've dropped down to materials, which is quite different to the Australian Materials Index because it includes things like steel and aluminium, and then followed by consumer staples. And then we've got healthcare at the bottom, amazingly. It'd be very interesting to see what happens to healthcare stocks under a Trump presidency. I don't really have a feel for it. If we look at Australia over the last quarter, information technology had been doing very well. We got another sell-off in WiseTech Global on some guidance. And so that has impacted that index. But finance has been the bright light over the last quarter, amazingly, because the valuation is terrible. And there are so many commentators that are now saying that. But the money still seems to keep flowing into the Australian banks. Quite extraordinary. And we drop down, small caps doing better than they have in recent years. And then we've got our material index. And then down the bottom, we've got energy and healthcare. So that's the way things sit with the US sectors where the money is flowing. If we look at the currency, we're now breaking out on a weekly chart. So we've broken through a couple of successive highs. And we've definitely got an uptrend there in the US dollar. If we look at the Aussie dollar, obviously we were down, but not as much as the US dollar went up. And we actually made some ground on Friday. I beg your pardon, that's a weekly chart. So that was last week as a whole. So the US dollar was up last week, but so was the Aussie dollar. Very interesting. All right, let's move on now to the Australian market. 64.37 is where we finished. The ASX 200 index was up 1.3% on the week. You'd expect that that'll be extended. And it set another new all-time high. So very impressive. But certainly the banks are contributing to that a great deal. Mostly positive outcomes in the Australian market. And IT was the only decliner, thanks to WiseTech, and also MP1 Megaport on Friday. So we'll go and have a look at the Aussie market. So there's the ASX 200 on a weekly chart. New all-time highs up there. Materials had a positive week. Healthcare was up a little bit. It was banks. There's certainly, they've had 3 weeks of very, very strong gains. And then we get to energy, which is still really in downtrend. Tries to have a little blip every now and again, but basically it's heading down. Turning now to precious metals. This is silver on a weekly chart. So we got a rebound off this very important support level. And if we go to gold, then that's gold on a daily chart. Last week, I said that we needed a convincing buy-side response. And so this change of character, which, this definitely was a change of character for the couple of weeks following the US election, the steepness of this rebound. When you see a rebound like this, where it's just all positive candles, all closing on their highs, good healthy ranges, it's a very high probability, not a guarantee, but it's a very high probability that we're now getting back to the former trend. So we've had a little brief change of character, but now we're back in the saddle and gold is roaring higher. So that's on a daily chart. You can see just how positive each session was. If we put it on a weekly, there you can see, I'll just remove that so you can see it more clearly. That was a very, very positive turnaround. And if we look at this in Australian dollars, then we're back up to getting up towards 4,200 in Australian dollars. Now, just before I move on, I'll show a chart of Bitcoin. So Bitcoin closed the week at 99,000. It actually come off a little bit this weekend. It's back to about 97,500 last time I looked. If you're confused about whether to take the plunge or not, I mean, this sort of incredible breakout that we've seen in Bitcoin, it broke out only on the 6th of November. It was trading at 74,000 and now we're at 99,000. It's an incredible move in just a couple of weeks. So that undoubtedly will draw a lot more interest into this asset class. So as I said earlier, I think I'm now comfortable. I'll put my hand up. I've been a Bitcoin skeptic up until quite recently. But I think now it's obvious that it's not going away. It's too widely accepted. There's too many companies. There are too many, governments that are setting up cryptocurrency. So I think it's not going to go away. You can argue that monetary policy around the world with just increasing levels of debt are a perfect case for a hedge using something like Bitcoin as well as gold. But why not ETFs? I think there is now a relative proliferation of Bitcoin and cryptocurrency ETFs. And that just removes all the hassle and the risk that I think has probably turned most people off who haven't got into Bitcoin yet. So again, consistent with any financial advice that you might need, I think if you wish to diversify your exposure into another asset class, then ETFs on Bitcoin or cryptocurrencies can certainly provide that opportunity. Just looking at this technically, what have we got? We've got an incredible breakout on rising volumes, and I suspect that these volumes are all limit. They're probably, as far as this software goes, I don't know how much higher these volume candles actually are, but that looks very, very suspicious, like they've gone beyond the limit. But if you look at the candles themselves, massive candles here, then we got 2 or 3 days to think about it, but the price actually went up. It didn't go sideways or down. That right there is hugely positive. Then we get 2 more days, 2 more huge days. And again, nothing to the downside, not even sideways. It continues to just drift to the upside, and then we explode out again. That is as robust a trend. Forget whether it's Bitcoin or gold or a BHP, whatever it is, you can only look at that chart and conclude that there is an enormous money flow, an urgency that has come into the Bitcoin market. So no telling where this could go. And there's all sorts of incredible projections out there about Bitcoin getting to so many millions of dollars. I have no idea, and I actually don't even want to think about it. So there is the Bitcoin for those that are interested. So just wrapping up on precious metals, gold put on $154. That's one of the best weekly gains in a number of years to 27.16. That was up 6% on the week. The Ukraine-Russia situation certainly contributed to that, but it's not the whole story. 4178 in Australian dollars, so up 5.3%, a little bit less than the US dollar figure because our currency actually went up a little bit. And silver, 31.34. So hopefully we've seen the lows in silver. When we look at gold stocks, it really, really now should be major green lights for gold stocks. They didn't really follow it as much as they should have to the upside when gold has been moving this year. They've been lagging on the traditional leverage effect that you would normally see. And then when gold turned down a bit, stocks got absolutely smashed. So they didn't follow as much to the upside. They got sold off far more to the downside than they should have relative to the gold price. Now the gold price is doing what it's doing. Just got this sense that this might be the tipping point and gold stocks really start to participate and really start to accelerate. But anyway, that's just my view, and there is absolutely no guarantee about that. The key here, as I've been saying forever, is to buy the best quality assets you can. I don't know that this is a signal to go out and buy speculative explorers. I think focus on the best producers and the best developers that you can find. And of course, Bitcoin, I talked about. I'll just have a look at what happened with the actual stock indices. So GDX, which is the Aussie index, had a really good week last week. So you can see we were pretty muted to the upside, and then the Aussie gold stocks got smashed in the brief downturn. But this was a good one last week, and you've got to think that we're going to get gap opens in gold and silver stocks on Monday. If we look at GDXJ, which is the global index on a weekly chart, again, not much of a response. It's really disappointing. But we know from history over the decades that at some point, gold stocks just explode in relative terms because they've got to play some catch up. And then, of course, you get the excess come in, which causes gold stocks to overshoot to the upside, and then the whole cycle starts again. But we've seen none of that really robust enthusiasm, so I'm pretty confident that's yet to come. Other commodities, copper, didn't do much, neither did nickel. And it's really a combination of the market was disappointed with what perceived as China not doing enough on stimulus. We've also got the strength in the US dollar. And then we've also got the confusion about what will Trump do with tariffs and what impact will those tariffs have, because there's just no predicting how that plays out. So I think the metals markets really just don't know which way to go at the moment is the bottom line. Crude oil was up to 71.18. Again, part of that was the fear about what's unfolding in Russia and the Ukraine and what impact that could possibly have on oil-producing assets in Europe. And that fear, of course, which is pushing prices up, is offset to a degree because there are plenty of forecasts out there about falling global demand. So again, this is another market like the metals market that really doesn't know which way it's going at the moment. There's the spot copper chart. So we've been hanging around down just above the $4 level for some time now. And this is crude oil also just jumping up and down in this sort of 66 to 76 range. Wrapping it all up, if you want to get better results, you've got to, and this is, trading and investing is no different to any other profession or any other sporting activity. If you want to get better results, but you want to be better than the majority, you've got to surround yourself with the resources and the routines that'll help you recognize changes early, because change is not going to go away. We're going to continue to see a lot of change. It's going to be unpredictable. It's going to be abrupt. So you need the resources, the information flow, and you need the pattern of behavior that allows you to acknowledge the change and respond to that change. Don't try and predict. Just respond to the change as it occurs. Have a clear risk management plan. Be clear and decisive about what the process is for you. Portfolio analyst this week, just continuing the focus on where the current momentum opportunities reside, because there are many, many stocks and parts of the market that are just doing extraordinarily well, more than enough for anybody. So just do that. This concept of a diversified portfolio, it doesn't hold water in my view, and I've said that for many, many years. Why would you want to own underperformers for the sake of diversification? It just makes zero sense to me. All right, that's it for this week. There's more information on the website, and there's my email address, and I'll be back with you next Sunday. Cheers.